Good morning, ladies and gentlemen. This is Brad Matheny. This is the third attempt at this video. I have no idea why TradingView is not letting me publish. I'll probably have to reboot everything and figure it out. But okay, so I had a lot of questions about this pullback. It's so funny. It's taken me almost an hour to get this video done for the third try now. But while I'm talking away here, exactly what I told you in the first video, which you never saw, is actually playing out. This is a broad pullback within a megaphone after an extreme buying phase. So pay attention here that we have a rally phase back up here, which took place because there were a lot of sellers over this past few days back in here. They got, a lot of people are short the market. So understand, they think this is a top. This very likely is a top, as I've predicted, but it's going to take likely until May 10th through May 20th to form the top, with a big blow-off top up here. But there were a lot of people short the market. When the markets rolled back over last week, we had a very big rotation in selling. This was a very big short squeeze. What causes the markets to go up like this is a big short squeeze where sellers turn into buyers to get out of their trades. Now what's happening over here, we had a bit of rotation up near this resistance area, and buyers turn into sellers with very heavy volume. Notice the volume down here. Very heavy volume this morning, which diminished around this 618 area. This is a beautiful Fibonacci price structure. And again, this 618 area is likely going to be holding up as support. You can already see this current bar. We spread it out, and you can see that we've got a very solid support area right here, setting up with a new bar back above the 618 level already. What I believe is going to happen is we're going to stall out back over here, maybe for an hour or two till the end of lunch, and we're going to move back upward along this Fibonacci price amplitude arc right here, moving upward. Now, the Fibonacci price amplitude arcs measure energy. So this is a 1 hour chart. I'm going to squeeze it down so you can see some of these arcs, see how they play out within the megaphone pattern. We have this energy arc playing across here. What's likely to happen is either A, price is going to move up above this arc and slide right past it into the megaphone area here, resuming a bullish trend to the upside, potentially getting back up into this arc, which is a bigger, broader arc over here, and or eventually reaching this green arc out over here, which is aligned with this light green arc right here. That comes from this peak right over here. So understand that that's where I have my topping formation set up. Right past this big arc and right past this big arc, which actually goes way back over here to the March lows. That's why this area, this May 10th through 20th, becomes very critical. This is where many price amplitude and vibrational functions align. Right over in this area, we have a very critical alignment somewhere between 422 and 428, 429. We're likely to be able to find a top back in this May 10th, 11th, 12th, 13th area and start to roll back downward. Okay, there's bigger arcs out in the future, so hypothetically I could show you those, but let's focus on what's going on right now. Now, I've drawn these resistance zones, and I need you to pay attention to the fact that we go back over here, and let me drag everything up, and you can see this resistance zone from back over here, February 2nd, okay, comes straight across this area here where we failed just recently. And these support zones off of gaps and dojis are here, here, and here. We have multiple support zones down in this area, which we just hit on this megaphone pattern, wave C, right down in this area, broad support area. And you can see this whole move took place right here after this big arc. You see this big blue arc here? This is what these arcs are about. They either stall before the arc, contract, and break out, or they stall after the arc, contract, find support, and then resume some sort of trending. Now, this could have been a big downward trend, but it stalled out down here at the megaphone, rotated back up, broke out above highs, confirming bullish trending. Now we've broken back down because this is the most recent unique low right here. This becomes our very critical low formation. And when this sets up, which it's setting up right now, this will become our next very critical low setup for this next particular move. Eventually, we're going to end up getting multiple unique low formations up through this trend, and I will be tracking this higher and higher until we get a bigger, broader breakdown. Right now, the biggest Fibonacci low level that you need to watch out for is right here, 403.80 roughly on the SPY. And that is the make or break level for downward trending. If we get a strong close below that level with confirmation that we are in a new bearish trend. Otherwise, the bias is continued to the upside, which is why I believe we will resolve around this 618 level, rally back up possibly along this green line here, maybe getting up into this area and breaking, gapping to the upside, maybe coming to this area, stalling out, and then breaking up to this upside. But I believe eventually we must get up into this area to reach this peak area, which will be a perfect Fibonacci structure, A, B, C, D, E, causing us to revert back to the downside. Now, I wanted to come over here and show you this chart. This is a 30-minute. Again, we got the same levels. I've drawn these levels weeks ago for you. I'm going to try to get this all to fit. This was part of my video over the last couple of weeks related to support resistance channels. You can see the resistance back over here in February, support zone down here, which I can carry forward. Try not to draw on it. Carry this forward. We have a resistance zone over here. Try to grab it and carry this forward. And then we have a support zone down here. Carry this forward. Notice that these zones that I'm drawing are almost exactly the same as the zones that I've drawn on the other chart. Reason being is it's all price based. I don't operate off of indicator rotations or negative divergence or whatever. I mean, yes, they become somewhat important at times, but price tells us everything we need to know. It literally tells us everything we need to know about what's going on in the market. So now, if we take a look at this, get rid of this line, and look at this support and resistance zone, we've come from this deep, deep low all the way back up, broke above this standout high right up here, rallied into a bullish trend. That was our first indication that we had bullish trending taking place. Then we consolidated, failed to get below this low, set up a new standout low, rallied back up, broke above this standout high right here. This is a daily chart, broke above it, confirmed it, broke above this standout high, confirmed it, bullish trending. We have bullish trending confirmed basically since this bar, this big white bar right here. Now we're in bullish trending. We've set up this low. This is a standout low. We rolled back over here. We broke below it. Okay, that was this move. This move didn't quite break below it. This bar, this black bar right here did. Okay, that broke below it, but then it failed. So now this is a lesson in failure to fail and failure to succeed. I talk about this periodically. You must understand that you always have a plan A and a plan B. If this had broken below this level, I'm going to move price to the front. Let's come over here and click on a bar. Move it to the front. If this had moved downward, this bar, let me zone it out here. If this bar here had moved downward and continued downward, we would have had confirmation of a bearish trend. And that would have changed my analysis dramatically. Confirmation of a bearish trend at this level means that price is going to come down and it's going to attempt to blow through resistance and it's going to attempt to run to the next standout low. The next lowest standout low, which ideally, ladies and gentlemen, is right back over here. I mean, you could call this a little standout low too, but I would say these two areas below these gaps would have been the next downside move if this continued. Because this failed to succeed in a downward bearish trigger, we reverted back to our original analysis of bullish because of the prior trend here. We established a new high. This bar actually did close above the high of this bar. And I can prove it to you by coming over here, dragging this out, pointing to here. We have a close on this bar of 415.93. We have a high on this bar of 415.72. We got above it by about 19 cents. That confirms that we are now still in a bullish trend, and we have failed to confirm on this bar. What does that mean? Fail to confirm means that we failed to succeed in resolving with a continued upward trend. So now, with a failure to resolve in a continued upward trend, what should have been expected is a downward price rotation, reasserting support somewhere, attempting to either A, come down to this level and break downward, or come down to some intermediate support level and revert back to the upside. This is what Fibonacci Price Theory teaches us, is that price is always seeking new highs and new lows, and we can trade either the primary trend or the secondary trend. The secondary trend would be the opposite. So again, bullish breakout, we expect bullish confirmation. We get a new high, but we get no bullish confirmation. What that means is either A, this next bar is going to attempt to provide bullish confirmation by closing higher above this level and above this close right here, or it's going to move to a reversion trade or a pullback trade, trying to find new support and or trying to break out from out below a new standout low. This is essentially, if I count the bars here, so 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13, 14, 15. Yeah. So we've got 15 bars. This low has not been touched. This is a unique price low, not a standout low. This becomes our new major line in the sand related to downward price trending. If we get below this level and confirm, we are in a bearish trend, ladies and gentlemen. That is the end of the upward move until price reverts, changes direction, and breaks above the newest unique high. This was, I'll show you here, a unique high. Why? Because this high had not been reached in the last 15 plus bars. Come across here, we got above it. Great. That confirms bullish trending. We set up this next new high. Okay, perfect. We rotated back down. This becomes our new unique high. So we have essentially resistance up here, which is likely to be broken and because we're in a bullish trend, as long as this low is not breached to the downside. That's how Fibonacci Price Theory works. This tells us we're bullish. It broke above this trend. We had been bullish from back over here. We had continued to establish these new price highs, new price lows. This new price low failed, reverted back to the upside. This new price high failed, reverted back to the downside. We are still bullish. The bias is bullish. The Fibonacci trend is bullish. This will likely resolve around this 618 level and roll higher. I come back over here to this chart. We're back here on hourly. Let's take a look at how we're doing and what's coming next. We are likely now to move, keep this thing here, and those. So here's our base around the 618, forming a good solid base, likely to move back up along this arc, potentially breaking out up in this area, maybe going straight up into this area, but once we get into this end of May 3rd, beginning of May 4th roughly, I believe we're going to be in the May 4th, May 5th, we're going to be in the extended chop up to this area, which sets up around May 10th, 11th, 12th. And this is really where you need to protect your capital. Somewhere between May 8th and May 15th or so, this is where you need to really protect your capital, assuming we get here. Right now, we need to see this base bottom hold and rally back up to the upside. Now remember, when I started this more than an hour ago, we were trading down below this level, and I was basically telling you the same thing. We're in a Fibonacci trend that is undeniable. We have a reversion of trend, we have volatility, we have consolidation, but ultimately I believe as long as this low holds and as long as we stay above this trend, we are going to revert back to the upside, try to get to 420, 421, ideally 421, right up in here, and then we're going to chop over the next 5, 6, 10 days up into this topping zone before we roll back downward around May 18th to 20th. All right, this video I did with my other recording software so that I guarantee you will see it. All right, guys, talk to you soon.